Hello everyone, it's Cameron from Tactical Trading Services again, and right now we're going to be in video 7 of our educational series titled Selling Options, Be the Casino. Before we get started, I'd like to read the risk disclaimer. Futures and options trading have potentially substantial rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets. Don't trade with money you can't afford to lose. This group is neither a solicitation nor an offer to buy or sell futures, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses like those discussed in any material within this group. The past performance of any trading system or methodology is not necessarily indicative of future results. So now that that is out of the way, I want you to think about something for a minute. Have you ever been to a casino? And if you have, then have you seen all the players in the casino whom ultimately are leaving with less money than they came with? Why is that? Why does the casino always seem to win? And I mean, sure, there's a few people here and there who make a good hit, hit the jackpot, but that's very rare compared to how many people don't make anything at all. And there's a reason why the casinos constantly win, and that's because they're playing the probabilities. Okay? The probabilities of success are in their favor. So, how can we think about being a casino as an options trader? Let's think about it like this for a minute. We'll look at this is a chart of the S&P, just a little snippet of it. So on any given trading day, the S&P is gonna 1, go up, 2, go down, 3, move sideways. So there's 3 options that it can do on any day. And let's say that you're bullish on the S&P. So if you're bullish, you think it's going to go to the moon, right? You think it's just going to just fly off the charts. So as an options buyer, what are you going to do? You're going to buy a call, right? You'll buy a call, and if we remember from our options strategies course, how do we make money whenever we buy a call? Only if the underlying goes up, correct? And I want to take note here that whenever you're a buyer of options, then your net theta is against you, right? So theta is continuously deteriorating the premium of your contract. I just want to point that out. We'll talk about that in a minute. So you only make money if it goes up. There's no other way. If it goes down, then you're going to lose money. If it goes sideways, then guess what? You're going to lose money again. Why? Because theta, okay? Theta on sideways, and if it goes down, that's a directional bias against you, okay? You're only going to make money as a call buyer if it goes up. So what is another course of action that we can take if we're bullish? We could sell a put credit spread, right? So if we sell a put credit spread, what does that mean? That means that we're going to make money whenever it goes up. But that also means that we're going to make money if it goes sideways. And we'll also make money if it goes slightly down, right? So we have 3 different ways to make money with this trade instead of just one on the other trade. When you think about that, think about those 2 trades, which one of those has the highest probability of success? Without breaking out a bell curve or anything, I think it's pretty safe to say that the put credit spread is the trade which will provide you with the highest probability of making money, right? I think that can be really fair to say. So let's talk about theta again. The result of positive theta from selling premium is definitely one of the most important aspects of selling options, okay? Because when theta is positive, then it's working in our favor, all right? As long as we're in a position where we sold the options. So time is working for us instead of against us, okay? And theta is a nonlinear value, and it exponentially increases the closer that we get to an option's expiration. And we should know this, okay? So that means that the closer we get to expiration, then the faster that this option is going to deteriorate and go to zero, ultimately, right? So selling premiums is our primary strategy here at TTS because it ensures that our portfolio theta value remains very high and positive, okay? And we can slowly collect premium on a day-to-day basis. You know, it's getting paid, pretty much getting paid in your sleep when you're in swing trades, right? So as long as our short strikes stay within our specified profit range, then we're going to extract theta each day, and we'll have a lot more control over our profitability. So, you know, of course, there are times where buying options could prove to be a good route, okay, and they can provide profit and good trades. They can, you know, a lot of people trade buying options all the time. That's all they do. But just the consistency of an income generation system, overall, we'd like to stick with selling as much as we can. There's just too much of an increase in the odds for us not to be the casino, okay? Because I don't want to provide you with a service where we're essentially buying lottery tickets, okay? How many lottery tickets do you go buy and you don't get anything? Or you win, you know, $2, $3, $4, $5. Okay. Do you hit the jackpot? No. So I want to be in the business of selling those lottery tickets to other people, which is what we're going to do together. We're going to sell those lottery tickets to people, and we're going to collect that premium, and we're going to generate consistent income over a specific amount of time. And I know that this was a very, very, very short video, but I just wanted to kind of clarify why I want to be more of a seller of options, okay? Because that's what's going to increase our probabilities, and that's what's going to put us in the forefront of profitability over the long term, and it's going to drastically increase our portfolios, and it's going to create that income generation system to where we can sit there and collect paychecks every week, okay? So again, there might be times where we buy some options, okay, that's fine, but majority of the times we're going to be selling them, and the reasons why are what I've listed in this short presentation. So if you think about this and you have any questions at all, then please let me know, and I'll address them, and we'll get it all cleared up. Thank you.